Welcome to this Friday edition of FreightWaves Now. I'm your host, Anthony Smith, and coming up, we're going to have Donny Gilbert giving us a broker update. But first, a carrier update from Zach Strickland, sponsored by PowerFleet. Stay tuned.
Hey everyone, and welcome to your carrier update presented by PowerFleet. So it is that time of year. It is January. It's the doldrums of winter. We're coming out of the holiday. Not a lot happening right now. Tender rejections plummeting off their peak of 14.26% all the way down to 10.5%. The new year did not have a big impact to tender rejections or capacity, really just starting to soften in general, which is something we traditionally see this time of year. If we go to the next map here, we're going to look at the weighted rejection index just to see where we have potential opportunities, probably more opportunities on the spot market than we would normally see. You know, this time of year for a carrier, it's really about utilization and keeping the trucks moving through the slow periods of time. Where are my increasing odds for utilization over the next couple of weeks? So you're really going to have to be on your toes during this time of year to make sure that your trucks are being utilized as optimally as possible. So looking at any of these blue market areas right here, you see the Midwest is in significant decline around Columbus, Ohio, Indianapolis, Detroit, the Harrisburg market over there in Pennsylvania. A lot of softening conditions continue there. Pittsburgh starting to show up in terms of an increasing amount of tender rejection rate, decent sized market as well. So the Pacific Northwest still strong. So something that I think is more interesting to look at is, you know, if you're a carrier that's regional, you're going to look at short haul volumes. I talked about that a few weeks ago, but today I want to talk about where's my long haul freight. We go to the next map. We're going to see this is the long haul outbound tender volume index. So anything that's taller is going to have a larger amount of long haul volumes, whereas anything in the darker blues are going to have your increasing amount of long haul outbound tender rejection rates. So what you want to do if you're looking for that long haul freight that's going to keep your truck rolling during the slow month is go to the tallest, darkest blue market you can find and see if you can find anything on the spot market that's going to keep your truck rolling across the country. Now, long haul freight we consider about 800 miles plus. These are multi-day team loads in general. So looking right here, you can see the middle part of the country has the most significant amount of long-haul freight outside of the West Coast, of course, over here. Los Angeles, not seeing an increasing amount of tender rejections, though, on your long-haul freight. Pacific Northwest does have some, but I want to target this middle section of the country. If we go to the next chart here, this is the Minneapolis market. If you notice, the Minneapolis market was pretty tall and a dark blue color. So that means that long-haul outbound tender rejection rates, as you see here in the blue line, 26.35%. So anything moving over, out of the Minneapolis market right now on the long-haul side is getting rejected rapidly. But what does that actually mean? So I've also got our reefer rejection. So if you look at this chart behind us where the blue, the tender rejection rates going up out of Minneapolis, long haul rejection rates, but what does that actually mean? It means this green line right here is the reefer outbound tender rejection rate, which is around 51% right now. So that means that you have a good chance that a lot of this long haul outbound tender rejection is actually coming from reefer capacity shortness. Anything down here you see right here in this orange line is actually the van tender rejection rate. So not as much dry van opportunity coming out of the Minneapolis market. So reefer long haul carriers, if you're looking to find freight over the next week or so, check out the Minneapolis market. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
I'm here with the man himself, Donny Gilbert. Donny, what do you have for us today?
I'm bringing here our outbound tender volumes. Here we made it through the holidays. Of course, we saw the tender volumes drop off during the actual holiday season, and they're just now starting to bounce back up. but we're also entering the first quarter, January. It's always a struggle with volumes throughout the month of January and February.
Right.
So I don't expect these to jump back up to the preseason volumes that we had before Christmas, but they will pick back up a little here. Right now we're at 76.22, which is very, very low. So this is what's how the year's going to start out.
Right.
We're going to have tender rejection rates drop and our tender volumes drop. Looking at my next chart here, I'm going to bring out outbound tender rejection rates. Here you see those after the Christmas season. They've started their decline now down to 10.05%. Now 10.05% is still a pretty fair, a great elevated rate for a national average, but we're going to see these to continue to drop. So for brokers right now, it's great to pre-book loads because right now the carrier cost from today to tomorrow is going to get cheaper as the days go on. But really the biggest thing for brokers right now is to, one, they need to build relationships during this first quarter.
Right.
Margins are going to shrink. It's going to be difficult for carriers to actually, they'll be out searching for volumes. So go out and find those carriers and book your load with these carriers and help those carriers run their trucks, keep their truck drivers rolling throughout the first and second quarter. And then of course, hopefully when these, of course our first big season is produce season,
right.
When these rates start picking back up, you'll actually be able to hold those carriers to run your freight and keep moving their truck, hopefully back in the lanes that they run their money-paying freight.
Right.
So right now, build your relationships, and of course, margins. Margins are going to fall off. So instead of trying to go out and book these high margin loads, you need volumes of loads.
Right.
So as your margins compress, as shippers push prices down, carriers are trying to keep the prices up, your margins are going to compress. You need to go out and be booking multiple loads at lower volumes to keep your revenues up.
Right.
Let's jump in and look at our one market for today. I brought here Columbia, South Carolina.
Okay.
This is a great market here where we see that volumes have well, actually, I want to start with our tender lead times. Mm-hmm. Tender lead times are actually dropping down, which means our shippers in the area are seeing, as these drivers come out of the houses, capacity is loosening. As capacity loosens, our tender rejection rates are being drawn in. Of course, they're pushed out during the holiday season because they're pre-booking their loads kind of before Christmas to make sure they had capacity to move their loads during the holiday season, and now they're dropping back down. Drive and tender rejection rates have kind of flatlined here through this last week, and they're about 10% still. And we see the reefer tender rejection rates kind of interesting. This is a good area where you see shippers trying to push rates down,
right.
But yet the carriers are trying to push rates up, and you see this fluctuation of the bouncing up and down for reefer tender rejection rates. And that's that kind of you push, I push, and see where we end up at.
Right.
But here I expect throughout the next week, we're going to see both reefer and drive and tender rejection rates start to drop, of course, in the Columbia market, and most of the markets across the U.S. You're going to start seeing that big downward decline that we always see that's expected in the first 2 weeks
Gotcha.
of January.
Excellent. Donny, thank you so much for that update. We appreciate you having you here. And so one of the things that you mentioned earlier was that it's going to be a bit of a lull when we get in the first half of the year until produce season. When can we really expect produce season to start kicking off? All
right, well, last year I really started throwing some projections out. It normally starts around, the first week of March with
right.
a lot of produce coming in from Mexico. But of course we had a lot of, we had a lot of rain, a lot of flooding that kind of postponed the produce season. And of course, it was a lot smaller of a peak season than what we expected from, of course, from the 2018 season.
Right.
So again, I'm going to throw it out there. Produce season starts, of course, near the equator. It's a lot warmer, and those areas that are down in the Central America, those areas are going to start producing their crops first. They're going to be coming in through either boats or air into Florida and crossing through the Laredo borders. And each week by week from there, we're going to start seeing it build up into Texas and up through the Florida, and then of course we'll move on into the big prime season, about June through the Carolinas, Georgia, and the southeast region of the U.S.
Excellent, Donny. Insightful as always. Thank you so much. And thank you so much for tuning in to this Friday edition of FreightWaves Now. The content doesn't stop here. We're available on all your favorite social media platforms, and we recently launched FreightWaves TV app. It's available on all your favorite streaming platforms as well, including Apple TV. And we'll see you next week.